Amazon is one of the best businesses out there right now. I believe that this is a long-term compound machine, and they have multiple reasons why, such as there are different types of businesses, which we'll be breaking down in this video today. Amazon is a growth business. They have multiple different growing revenue streams, from online stores to subscription services, and this is very important as it creates a massive ecosystem for them to continue their growth. As online stores account for about 40%, third-party sellers about 20%, AWS about 15%, and so forth. We'll be breaking down their businesses today, and we'll be seeing how good of a business Amazon really is, and then we'll be seeing if it's worth buying today. When looking into specific businesses, their cloud computing business is one of the strongest in the world. AWS controls about 31 to 33% of the entire global cloud infrastructure market. It's the number one player in cloud, which is about 34% of the entire market, compared to Microsoft and Google at 21 and 11%. They have continuous growth of about 12 to 15% year over year, which is very strong compared to some of their other businesses, and it's around 25 to 30% margins. Although it only makes up around 15 to 17% of Amazon's total revenue, it accounts for about 60% of Amazon's operating profit. AWS also runs at a 25 to 30% operating margin, which is much higher than their razor thin margins for the retail side at about 2 to 4%. AWS is also very important when looking at the business specifically, as it acts as some sort of a subscription type business. This is because AWS charges customers on a usage-based model. So whenever a company needs some data, whenever they need to run mission-critical workloads on a cloud-based server, they use AWS and they pay through contract payments. And this usually goes for years. And because of Amazon's massive database, through all these previous contracts, they're able to gain more and more leverage in the market, able to get more contracts, therefore grow even more. Cloud is also necessary for many of these businesses, as somewhat like an electricity bill. Although it's not purely subscription-based where you're paying monthly for businesses, through the contracts, it's kind of like a necessity for to keep running their business, somewhat like an electricity bill. As the more you run it, the more you pay. So the more a company grows, the more these companies have to pay for AWS services. And because of this necessity, AWS has a massive retention rate at about 90% for large accounts. And this is really important as Amazon can retain these customers and not lose market share and continue growing at the rate they are. And because of how massive they are and the margins, they're able to reinvest this into other businesses or even AWS again and keep growing and making them a compounding machine. Alongside AWS, which acts like a subscription-based model, Amazon actually has subscription-based models which starts with Prime, as there's over 200 million users of Prime, and which accounts for about 60% of US households with a Prime membership. Prime members also usually don't cancel, as Prime has about a 90% renewal rate, which means that users want to stay on Prime and they'll keep paying for it month over month. And this is really good as they already have one of the largest market shares, beating out Netflix or HBO Max. Prime also has a massive catalog of stuff, including Prime Video, Prime Music, Whole Foods discounts, photo storage, and other exclusive deals. And Amazon keeps adding new things and has a massive ecosystem and massive database, which allows them to keep growing this business. With revenue already surpassing $40 billion in 2024, Amazon Prime has a massive 15 to 20% operating margins for subscriptions, which is very strong. And also, when a Prime member when an Amazon user is a Prime member, they usually spend 2 times more on Amazon than a non-Prime member because of the benefits that come with it. This is very lucrative for their business, and it makes them a monopoly in themselves. Now we go to their ad business, which is also an amazing business, and they're the third largest ad business in the world behind Google and Meta, making that another massive business for them. The best thing about Amazon's ad business is not its size, but its target towards customers. As whenever customers search on Amazon's retail business for clothes or toys or medicines, they are able to see exactly what they want because they get ads for the things they usually search for. Amazon has a massive database of what people want, what people search for, what people buy. And because of that, they can target these ads to those people and get even more clicks. That allows Amazon to keep growing their ad business through more data, and which can be seen as from 2021 to 2024, Amazon has nearly increased their business by 1.5 times. And this is a very lucrative business for Amazon, and also ad margins are much bigger than other forms of business, as they have about 70 to 80% gross margins and about 30 to 40% operating margins, which are very, very strong. And this ends up completing the three strongest businesses Amazon has. However, we cannot forget the retail business, as the overall retail business is very strong. It has been one of the strongest factors for Amazon. It was there in its beginning, and it still accounts for over $210 billion, and is still somewhat growing year over year. The biggest issue with this is their margins are extremely low, at 2 to 4%, which makes them, even if they grow by another 100 billion, it's not going to be as strong as if their AWS grows by another 30 billion. This is a really big issue. However, they do have the third-party seller services, which has been growing at a much more rapid pace and is a much more lucrative business, as they also have referral fees of 8 to 15% of the price whenever somebody sells something on Amazon. This also has slightly higher margins and is one of the best players for Amazon's retail growth. Alright, let's do a summary on Amazon's business. First off, Amazon's retail side is what keeps it front and center in people's minds. When you think about Amazon, you think about free shipping, millions of products, your Prime membership. That's what keeps it very solid, and it anchors the company. It brings in traffic and keeps people loyal, and it's basically default for Amazon in general. However, on top of that, they have AWS cloud, their cloud computing powerhouse, which is a very steady and sticky and high margin business. Then on top of that, you have advertising, which is one of the fastest growing ad businesses in the world. They have amazing algorithms and a very strong database for growth, and also they're able to target the customers on the retail app itself. And then you have the Prime subscriptions, which locks in customers and allows for recurring revenue. And then you also have the third-party marketplace, which is growing at such a high rate, it might surpass the retail business, and is slightly higher margin and has fees, which allows for more revenue. They're all very strong long-term businesses and are amazing for their overall business and ecosystem. Therefore, Amazon proves a strong growing moat through all these different businesses. They're very diverse and have arguably the strongest moat in the entire US economy. However, you can argue that the retail business is low margin, and AWS and Prime do face heavy competition from companies like Google and Meta. I would give their business a 9 out of 10, being very strong. I would give it a 10 out of 10 if the retail business wasn't as low margin. However, it is a necessity for Amazon when they're coming up to have retail business to start off. And for the growth business, I'll give them an 8 out of 10, as they do have extremely high growth in AWS ads, Prime subscriptions, and third-party sellers. However, over 40% of their business does come from their main retail business, which is a very low margin and has very little growth recently. Now for the most difficult part in Amazon's evaluation, which is their valuation. This is because Amazon's cash flow is inconsistent and their capex is very large. They have a very high growing capex, as it's been exploding all the way since their inception. The high capex isn't a waste though. It's creating future growth for Amazon by investing into AI and different things such as AWS features, which can help Amazon grow even more. And Amazon has had a history of spending money on things and them actually turning in a profit and becoming very strong. When you combine these big investments like AWS, ads, and Prime, you realize that Amazon might be cheaper than it does look on paper, as it does show a forward P of 45 to 55 times versus S&P's forward P of 20 to 22 times. And even the free cash flow yield, which in my opinion is a better way of looking at this, of 1 to 2% versus the S&P 500's of 4 to 5%. However, you can see the free cash flow growing at a much higher rate and it having some exploding capabilities. And especially with the capex increase recently, their free cash flow has been lingering. And with a decreasing capex and also their new investments rising, I believe that Amazon's free cash flow and earnings can explode and can create massive growth for a business, which can show even at these forward PEs and free cash flow yields, because of their price not increasing as much. I do believe Amazon is a good buy right now, and it's a very good long-term hold, and even short-term, as once they do reduce capex and start showing their actual business side and the actual by actually showing their free cash flow power and earnings power, they will actually show investors that they're a great business, and then their price will eventually go up. My final call for Amazon is that it's a buy currently at $222, and I'll give them a total rating of 8 out of 10, which is very high, and I believe that this is one of the best businesses you can buy right now. And for its size, it'll be very difficult to find any other businesses besides Google, which are at the same value and at the same growth rate that Amazon's at. However, if you do hold lots of Amazon already, I do recommend for you to wait for another dip in the market, such as what we had recently in April. As if you can wait for that and wait till the stock goes down to around $160, if it does, or even maybe $200, that'll be a better buy than what it is right now, and can boost the stock's total rating to a 9 out of 10, or maybe even a 10 out of 10. And this is an amazing business. It's great for long term, and I believe that this is the optimal type of business to look for in the market. If you want more videos like these, please subscribe, and thank you for watching.